Good evening, I'm Giuseppe Basile. I'm the NSN trader you can find at the blog www.fibstalker.com. I also post regularly on Twitter using the @fibstalker nickname. Good evening, today is Monday, December the 2nd, 2013, and it's 20 past 5 p.m. time in Toronto. In this video I'm going to review for you three major pairs: the pound versus the US dollar, the Australian dollar versus the US dollar, and the US dollar versus the Canadian dollar. So let's start from the pound, which is the chart that you see on the screen. This is the daily chart, and those who follow me know that I've been looking at this chart from the long side, and actually I've been looking at the in the recent weeks I've been looking at this extension long. As you can see, program trading picked up, algorithm trading picked up price at 158.50, and that's what I try to do in my trading. What I try to do, I try to spot the algorithm trading footprint on price, and we had this 164.50 area of first target, and we came 10 pips shy of that, 9 pips, 8 pips shy of that, and we saw this we saw actually today this this big tail here, with program trading trying to push price into the first target. Eventually the price of pound had to give way to sellers, which are horizontally on this market, on the SP 500. They are on the euro, they are on gold, as a reaction of to the fact that the dollar is getting a bid at the moment. So in case we continue lower here, there is the possibility for price in this pair to find support at the next level. This is where program trading is known to go and pick the price up. 159.40 is going to be the level. So if price keeps moving lower, we are going to have a 90% retracement here of the last move higher for the pound. So be very careful. This is not a short, unfortunately, because there is no short signal given from given by this market, and actually we could analyze, and as an exercise, then what I would say, let's analyze the 240 minutes, the 4-hour chart, and let's see what we can actually get from this. So when I look at this chart, I'm looking at the last few days, last few weeks here of move higher, and at some point the market started moving in extension here, and we actually can see participation here at these levels, and so at the moment we are going to get, and actually we're already getting support here at this level. So this is the level where this market would reverse, would need to reverse, and if we move below 163.17, then that's the level that will we need to watch. 17 sorry, just want to go back to the 240 minutes and tell you that the level is 163.17. 63.17 is the level that we have to breach in order to confirm this 90% correction here. So be very careful here. We didn't have, on the shorter time frame, we did not have a sell signal just yet here. Moving to the Australian dollar versus the US dollar, you will remember that I'm looking at lower prices here, and we had confirmation already. So we have this measure move that got participation, and it was also confirmed. So we had this measure move in 0.9712, and as you can see, price kept moving lower. And at this stage now, we had a sequence of moves on the daily, and we can see this very clearly here. And price started reversing after we hit the second target here, and the Australian dollar is very weak against the dollar, and in fact it's trading in extension, as you can see here, which means that program trading has already traded its shorts here, and actually traded right today. And that would have been the level I would have given you if I was able to take this video yesterday. Unfortunately, I was not able to. And so what we get now, next first target is going to be 0.90 here. 0.90 is the first target, but this price is going to continue lower into 0.8920. And if you got into short here in this area, even if we get a bounce here, this could be a good trade with a stop above 0.9184. If that happens, then we're going to watch another level, but I believe that we're going to simply continue lower here, because lower price have been confirmed already. So if we bounce and break this 0.9184, the next level of resistance is going to be 0.9248, and that's where we reverse. Otherwise, we just keep moving lower, 0.90 and then 0.8920, and that's the level, the second final level to watch. The Canadian dollar is actually surprising me. If you use the method though to enter and confirm the entry, you wouldn't have any problems in exiting at a break-even this market, because when we first tested this 105.66, you could see the move lower, which was a confirmed reaction lower here, and then price eventually kept moving higher. So at the moment, if we look on the weekly chart, which is the chart that you see on the screen here, for this pair, we have been looking at this long-term resistance area here that you can see acted as a resistance for a few times, and even recently 105.60 acted as a resistance. So at this moment, this whole area of resistance that it's 3 years old now has been holding price lower, and this 108.43 is the level that is the level that we have to watch. If price moves above that level, then this is in jeopardy. And I believe one of the fundamental reasons why the Canadian dollar may be weakening against the US dollar is also because Canada decided to keep rates low, and this is making the Canadian dollar cheaper, and these rates might stay low for years. And this is really it for these pairs. I hope you enjoyed this video, and I hope this video is useful to you. I think it's important that you keep an eye on these markets, because there is a possibility that we will have some corrections here. So I hope this video helps you, and this is only for subscribers. If you want to get this video, just go to my website filmstalker.com and subscribe for the free newsletter. Thanks a lot for your attention, and have a great evening and a great trading week. Bye now.